measure of dollar strength against major currencies like the pound, the euro, and the yen, and some others. And just watching, obviously, dollar strength over the past, looking back over the past year, has just been kind of predictable when if you've kept up with what's been happening fundamentally, and you understand, I guess, the fact that the US is really one of the better countries and currencies dealing with the crisis, as far as, or many crisis events that are going on around the world. Yeah, let's get into the Bloomberg articles. The jumbo Fed rate hike, as we already know, is in play as Powell sticks to hawkish view. So Fed chair speaks as bets for 75 basis point hike harden. Says Fed has accepts responsibility for price stability. Price is basically inflation. So basically, the Federal Reserve, Jerome Powell, said officials won't flinch in the battle to curb inflation, hardening expectations that they'll deliver a third straight jumbo hike later this month. And we need to act now forthrightly, strongly, as we have been doing, Powell said Thursday in remarks at the Cato Institute's Monetary Policy Conference in Washington. My colleagues and I are strongly committed to the project and will keep at it. He spoke with a moderator in a virtual question and answer session. So what that basically means is that they're going to continue to hike. And what does that mean for the dollar? And what, in trading, this is basically a game of probabilities. That is being priced in insofar as the fact that the dollar's going higher and higher is being priced in. So it's the money has really been made, right? The buy the rumor was happening and has been happening all this time, right? Just basically buying a rumor and confirming with data. Now with CPI data, right, consumer prices index, that's going to be a major I guess signal as to whether the Federal Reserve, and I spoke about this last week, right, whether the Federal Reserve will continue to hike at 75 basis points. Yeah, that is going to be key. If inflation comes down, yeah, and I wouldn't say necessarily disappointing, because in fact, the US actually want inflation to come down, and all central banks want inflation to come down to their 2% target, right? Now, if inflation does come down from, I think it was 8.5, 8.6, something like that, and if, let's say, for example, it stays around there, or it starts to plateau, or it actually comes out as lower than the previous number, then the Fed are likely to do what? Maybe hike at 50 basis points, because they won't need to hike aggressively, which then would actually and should actually have the effect of the dollar probably selling off and being repriced, right, revalued, because this, value, right, the dollar appreciating is based off of the market getting ahead of a 75 basis point hike. And I'm not saying that it can't go higher. It probably could potentially this week go higher, but the market has already priced in what the 75 basis point hike and the value of the dollar should be. Now it would have to reprice the dollar, yeah, if there's a smaller hike, right? So then you would, and that would be triggered by CPI data, right? So CPI data will trigger that, and so depending again on whether inflation is continuing to rise, or if it falls sharply, that will determine the. So moving forward, I probably expect, if again CPI data comes out positive, as far as it's seen as growing, then you would probably want to still continue to buy the dollar on pullbacks. We do have prices have come down to this demand zone, but also as well the monthly moving fair value, which is basically just a moving average. It's got the EMA exponential and a simple moving average, but in the context of understanding value, an average or a mean
is actually what would be considered fair value. Because if this is expensive, right, and it is a bargain price, then if you're looking at the last 21 days, which is 21 days in a trading month, which is a monthly, you're looking at where fair value is, right? Fair value between an expensive and a bargain area, 50% between that is actually fair value. Yeah, prices have come down to that fair value price. Now, for me, I tend not to look to buy anything or anything above at least a monthly moving fair value, because that would be considered expensive, right? You want to look for not only demand zones, but on a daily or weekly time frame, but also as well some confluence in terms of understanding where fair value is. And fair value for me has come back down to the dollar, so I know now is a decent time to look for potential buy trade. Doesn't mean that you should buy right now. If prices go below that, then that's going to be a better bargain, right? So just gives context to understanding value, and that is really important when it comes to fundamental analysis. So for me, it still continues to be dollar buys, but I will be, and I'm in actually some dollar trades anyway, like the euro dollar. So I will be keeping my eye on the fundamentals as to determine what I should be doing with those trades. Now, moving on to the dollar yen. And the dollar yen, massive move last week, right? I think prices were at the 140s and they've literally just jumped up, to the 145s, and very interesting. And I think the Bank of Japan have literally now said that they are very concerned about a devalued yen and the speed at which it's devaluing, which is really important. And so there's talk of potential intervention, or they're definitely looking to push the button. Not saying that they will, but there's definitely a lot of pressure on them to do that. 140 was the line in the sand, and obviously prices have gone beyond that. So now the Bank of Japan are under a lot of pressure to potentially step in, but they're going to have to probably wait a little bit just to see. If you start to see prices drift higher again, I personally may take a little short, not necessarily on the dollar yen, but something like the euro yen or some other yen crosses. So as it stands, I'm still a buyer of the dollar. So if you get quite a large pullback now, from the high of 1 to 145s, where it kind of just peaked down to the 137s, is you're looking at, what's that, about 800 pips, right? So that actually is a nice pullback into a nice demand zone, and then we also know as well that at least the monthly fair value would be below that as well. So for me, I do like the fact that this area here is a nice area of demand. I think bets will be off if the Bank of Japan do come out and say that they are intervening. I think for me, then I will probably hesitate on trying to short any yen crosses. I think I'd have to just wait for the dust to settle and for really value to establish itself. But until that happens, if prices just naturally drift back down to this 137 area without the Bank of Japan intervening, then I think for me that is a decent buy. And also as well, it depends on what the dollar is doing from a monetary policy perspective. But my bias still for now is to go long on this currency pair. Looking at the dollar Swiss, and the dollar Swiss actually has dropped like a stone from last week. So we had a nice supply zone here, and then pretty much dropped away, right? There was, I guess, maybe some risk sentiment going on. We've come down into this demand zone, which I think is actually really nice, but I'm not interested in necessarily buying this currency pair simply because you've got two central banks that are looking to hike rates. But if you are looking to buy the dollar Swiss, I think now is a decent opportunity. If you sold the dollar and bought the Swiss franc against the dollar, that was a really nice technical level. I did like that, but that obviously you're a bit too late for that. And if you did get into that, that would have been well done, right? For me, I do think technically I do like this level here, the 94 round number. I do really like that technically, but I don't like the pair to trade. But those are your options for the dollar Swiss. Dollar CAD, the Canadian dollar hiked rates this week, and so capping the upside for the dollar CAD, which basically meant that if you were looking to buy the Canadian dollar and they hiked by, I think it was 75 basis points, that was a nice little buy right just before they did, and that's it. So makes sense. But again, for me, you've got two pairs, two currencies that are hiking rates, and if you do have two currencies that are hiking rates, that's not to say that you can't or you shouldn't trade them, because ultimately what you should get is actually an auction or a ranging market, as is typically known on the web, where in fact is actually an auction, and an auctioning market, which is basically where buyers and sellers are in agreement of the exchange rate, right? So this has been an expensive area. This is again an expensive area. This has been a bargain area. So prices were unlikely to continue trending above that, with the Bank of Canada hiking 75 basis points. But there's also a caveat to that, right, as well, because you have to have a really good economy in order to support rate hikes, and then and to support price. Now, when we get to the euro, you'll see there's a difference between the Canadian dollar price increasing in value and the euro, even though the euro actually did hike their rates by 75 basis points. But for me, not really a pair that I'm looking to trade. But if you are, that was really the opportunity for you to get short and buy the Canadian dollar against the US dollar. If you are buying the US dollar right now, I think against the Canadian dollar, I think now is a decent time. I think probably for me, maybe around, I think the best area would be about the 127s, if it can get down there, right? Nobody knows, but if it does, and you really think that the US dollar is a bargain against the Canadian dollar, then that would be where you're looking to buy. New Zealand dollar, US dollar. New Zealand dollar struggling at the moment against the US dollar, that is, and makes sense in a risk-off environment. Commodity currencies don't tend to do too well against the dollar, but and again, for me, it's not really a pair that I'm interested in taking, although I am a buyer of the New Zealand dollar against some other currencies. Again, I did say and been saying for the last couple of weeks that if I was going to be a buyer or seller, my bias would be to the downside, and you're seeing pretty much what has been happening now. We've got a bit of a pullback into some supply, so if you are looking to get short here, it's a decent area. I think the 0.625 areas I think is probably a nicer zone to get short if you want to get short on that. From a buying perspective, I would probably rather wait for price to there is, I guess technically there is a demand zone here because it has made higher highs, higher lows, so in fact I will draw it. It was a demand zone, but I don't think it's necessarily a strong area of demand, but it could be, right? But in the way that I trade, I really want to see some other things just play out before, if I was looking to buy this. Namely, I would want prices to really go kind of higher and prove that there's demand, then pull back to that demand zone, and then look to be a buyer if I was looking to be a buyer of the New Zealand dollar, US dollar. Moving on to the pound dollar. Pound dollar again just keeps going lower, right? And technically, I really want to be a buyer of the US dollar and short the British pound somewhere around here. But we do have Liz Truss, who is our new Prime Minister. Her energy bill, I guess, price cap may rescue UK inflation, and inflation may peak, right? So economists say freezing power and gas bills will cut inflation, which is basically what the economy needs, right? So stimulus now points to higher rates for longer, economists say. So economists at Barclays, Berenberg and Bloomberg Economics said Truss's package to rein in soaring electricity and natural gas prices would have a sweeping impact on the UK economy and may manage to arrest inflation at July's reading of 10.1%. So, the forecasts underscore the importance of surging the cost of living squeeze to the outlook of the UK. By halting increases in utility bills, the government could stop the biggest upward pressure on consumer prices, giving the both consumers and investors breathing room to adjust to other pressures pushing up the cost of goods and services, right? So if consumers, as far as like myself, are paying less on energy and food and things like that, or energy in more specific, then it can help the cost of living crisis. That's basically the point in that. And there was something else interesting in here. Was it here? I think there was talk about Barclays said inflation would fall back to 5% in 2023, and it says capping energy prices would provide a welcome help to the Bank of England in regaining control of inflation dynamics. Montague wrote, prolonged hikes into next year are now less likely in our view. But there was something else in here that I thought I had highlighted. Where was it? Maybe it wasn't in here. But yeah, so that's pretty much it. I think I think the fact that the Bank of England, if inflation does start to come down, the Bank of England are probably likely to hike less, and in fact it could improve the economy. And so if the data starts to come in that the UK actually may avoid a recession, as unlikely as that seems, or maybe not go into a deep recession, then in fact the pound could be a potential buy. But for now, against the US dollar, which I think is on much better footing, I do think any pullbacks to that supply zone for me are really decent. The 118 levels I think are decent shorts. Right now, again, going long on the pound, you're really going long into a historical level. Yeah, that happened in 2020. But I don't think, for me, I think that's probably more profit taking as a reaction. But who knows, right? In terms of buying the pound, for me, there's not enough fundamentals for me to buy the pound at this area here, because if the market doesn't like Liz Truss's, or doesn't think that her policy is going to, help the economy, or as much as is perceived, then the pound is still going to be is not going to be a bargain here, is it? It could fall further. So for me, the path of least resistance is still continuing to the downside, and so against the dollar anyway. Actually, in short on this, and as are many of the guys in the trading room, it's a setup again that I'm not really going to go into on the in this videos beyond this video, but from a fundamental perspective, we did have the euro hike rates, right? And many people kind of scratching their heads as to, well, they hiked rates, so why isn't the euro, flying off the shelf? Why aren't investors, looking to, buy the euro, and why isn't the euro going higher? And really, I mean, we've known this in Trading 180, that it's all really about the economy and the energy crisis. That is what is really holding the euro back. So the euro trading is not about the energy crisis. It's all about the energy crisis, not ECB rate hikes. So the euro fell below the dollar parity after the ECB rate decision. The ECB is fighting gravity in FX markets, says Danske Bank, right? So Danske Bank, as well as many other banks, are the big money. And one of the quotes, I guess, I kind of wanted to show you guys was, where was it now? Yeah, it said that the where was it? There's a quote in here. The ECB is fighting gravity in markets. It's Christopher Kejar Holmolt, head of FX research at Danske Bank. Eurodollar has more downside in store, and ECB decision does not change that. And it says the rate announcements. In its rate announcement, the ECB struck a hawkish tone, saying that it expects to raise rates further. Raise rates further as inflation remains far too high. And it says down here, we do not target, no, where is it? Okay, Euro strategists are united in their predictions that the way forward is more weakness. Yes, more weakness for the Euro. Danske Bank's Lomholt said fair value for the currency is closer to 90 cents compared with current trading around 99 cents. I suspect that the ECB will have to produce these big heights just to hold the euro there. This is Stephen Barrow, an FX strategist at Standard Bank. So, bank quotes, these guys are the smartest guys, right? Way smarter than us. And so if they're saying that potentially, prices could actually fall down to the 90-cent area, there's about 1,000 pips from here. So, that all obviously depends on the energy crisis and whether Russia will turn off the taps. And there's an article which says Scholz says Germany prepared for Russia gas halt over Ukraine. So again, they have to prepare for these things. There is something on the horizon, and again, nobody knows, right? The euro could be at least a short-term buy if there's a resolution with Russia. It doesn't look like it. It's probably unlikely, but if there is, or it's they managed to kind of help the economy somehow and cap gas prices without having other effects on inflation, etc., and the economy, then that would be great. But it is a possibility, right? So Germany has prepared for Russia to largely cut off gas supplies because of the war against Ukraine. So, and it doesn't look like the war is going to end anytime soon. So when it comes to the euro, for me at this present time, with all the uncertainty around the euro, for me it's just a no-brainer to go short, right? Could I be wrong about this? Yeah, if I'm wrong, it's okay. I'll just lose one trade, right? It's not the biggest deal in the world. But nobody knows what's going to happen. But it looks like the path of this resistance is to the downside. Now that could change temporarily. If they do manage to find a way, some sort of resolution, then I do think that the euro will rally. Either way, though, for now, I'm still to the short side. If you are going short, then any pullbacks to a supply zone, daily supply zone like the around here or the 103s, I think are very good levels to look for potential short trades. If you are looking to be a buyer of the euro, then any pullbacks into the 99-cent area is probably going to be your best bet, and taking that chance and that gamble, right, in the fact that the euro will come out unscathed on the other side of this conflict and the economy. Looking at the Aussie dollar, and Aussie dollar, I was saying last week and the week before that I do think that technically I do like this level, really nice level, but for me it would be very hard to buy the Australian dollar against the US dollar. I'm a buyer of the Australian dollar, just not against the US dollar. So it reacted from a technical perspective, which was I wouldn't say surprising, but I think the Australian dollar, they did hike rates and they had decent GDP numbers as well, so that actually helped with price stabilizing here, I guess, if you want to call it stabilizing. But it was a bargain really here, and so if it was going to go any lower, then that would have meant probably that the Australian dollar would have been seen as not a bargain here, right? But obviously what's helped the Australian dollar maintain its bargain value around here, my buyers temporarily, I guess, have got involved in this, and is because of the recent fundamentals. So I don't really have a bias either way in terms of me trying to trade this, but if I did, then it would still be, I would say buying the US dollar, but I'm not looking to get involved in this trade. But if you are, I think now is a okay time. I think the top end of this, the 70-cent area is probably the best area to look for short trades, or say the best area, but it's a decent area, and even better would be the 71, around the 71-cent area. If you were looking at getting shorts, getting long, obviously you'd have to wait for a pullback back into that 0.675, 67.5 cent area before looking at getting long. Aussie yen, and Aussie yen again, just like the yen as devalued this week, had an effect on obviously the Australian dollar and Australian dollar, Japanese yen, and now we have really a decent area to look for any kind of long trades. Now, again, I think the market really is ignoring any kind of risk off sentiment. So yeah, I think any pullbacks into this zone, the 95 area, I think is actually a decent decent buy for the Australian dollar. Providing that, again, the Bank of Japan doesn't come in and start to intervene into markets. And then for me, I think all bets are off when it comes to buying or trying to sell the yen, or buying anything against the yen until really the dust is settled. So any pullbacks into that demand zone for me are decent. And gold, right? Gold of this, historical level over the past, it's touched several times, matter of fact. So for me, I'm not looking to trade gold so much as I am looking to buy in terms of the physical metal. But I do think that this is going to be a bit of a long-term play. I think as the dollar starts to strengthen, if it does strengthen, right, let's say for example CPI comes out and it goes higher, and then the Fed raised by 75 basis points, then I do think that gold potentially could still start to drop a little bit more. But at beyond these prices, I think gold is an absolute steal in the coming future. Central banks, there was an article, I couldn't find it before I recorded it, but there was an article, again another article, because I think I posted one earlier in the year about central banks increasing their gold holdings. So that's become another recent report. So central banks, are not increasing their gold holdings for no reason, right? So for me, I think just buying any in and around this area for me is decent. Is definitely decent prices. Again, not financial advice. I'm not telling you to go out to buy physical gold or trade gold or anything like that. If you don't want to trade it, don't trade it, right? If you do, but you're unsure, then still stay out, right? But the point being is that for me, my bias, actually long-term bias, is to go long gold. My short-term bias is, as long as the dollar continues to strengthen, then it just pushes gold down to cheaper prices, right? It just continue to push gold down, and this may start to break. And again, the more times the level is touched, the less of a bargain it becomes, right? Because it becomes now common price. So don't be surprised if you see gold actually break this level and come down to maybe this longer term demand zone just below it, which is from April 2020, the 1647 to 1656 area. So yeah, but if you are looking to potentially get short on gold, then I think the nearest area to look for short trades is going to be beyond that monthly moving fair value, and then back down into the back up into that supply zone before looking at continued short trades. Anyways, guys, that's it for this week. Again, don't forget